Good Wednesday evening, option traders. This is Sam the Trader Geek with your Wednesday, February 12th, 2025 option review video. Hope you had a great trading day. And what a trading day it was. We're looking here at the opening of all the indices, and obviously they came in all in the red after the worse than expected consumer price index data. But as you can see, by the end of the day, all was forgiven, and the Qs ended up slightly, and the rest were, you can see here, way up in their range in terms of improving over the day. So 88% of its closing range, 81% for the SPY. The DIA still was in the red 0.5%. So was the small cap growth. And ARKK ended up the day up 2.17%. I don't know what's going on with this thing not working. Anyway, I'm about to give up on this tool since it can't seem to draw the data when we need it. We can see here that as far as breadth goes, we are above the 21, above the 50, and above the 200 SMA, but on a short-term basis, a little mixed picture as far as being above the 8 EMA. When we look at the day, we can see that we started out a lot in the red, and you can see that it turned most of these industry groups very green. Oil and gas and energy stocks were basically the losers on the day. Oil and gas exploration up minus 3.2%. Energy was down 2.4%. Home builders 2.9%, or 1.9% down. So kind of a mixed bag on the day, although we did see a lot of improvement, obviously, as we mentioned at the beginning of the video. China up 2.8%. BABA, our trade, is doing great. Gold miners up 1.7%, continuing the strength in gold as it continues to hover at all-time highs. Biotech up 1%, and metals and mining, oddly enough, probably more industrial metals, down 0.8%. You can see on a 5-day basis, really mixed bag here. China stocks taking the cake, and transports up 3.8%. Gold miners up 2.7%. On a one trading month basis, China and gold miners, clubhouse leaders, along with cybersecurity stocks up 10.5%. Internet stocks up 8.6%. And on a 50-day basis, kind of similar picture. Gold miners up 12.6%, cybersecurity up 11.7%, and internet stocks up 9%. The only other thing I care about here are the National Association of Active Investment Managers, but the next one does not come out until tomorrow. So we'll see whether they reduced or increased exposure to the market. It's been kind of up and down, so you can see 70% to 86%, down to 68%, up to 84%, kind of just as choppy as the market has been. Taking a look at the charts, we'll just do the dailies here on this midweek video. You can see here that after Friday's really down day, everybody thinking, okay, we're going to have a third gap down Monday, which, you know, the market fools the majority, of course. And then so we've had two green candles, a little gap down, but a solid bounce off the 50-day. This blue line is the 50-day moving average, and this dot up here at 6101, if we can hurdle that on a closing basis, and that would turn up the market and give us potential for more upside. And we have, of course, the Bollinger Bands up here. This red line and the green line are my proxies for the options implied expected move. That's the upper edge. This is lower edge. We're solidly in the middle. We really haven't gone anywhere. We've been up, we've been down. And as you recall, the move for the entire week was about 98 points. Here we see the weekly. Doesn't look too bad. Let me make sure I'm scrolled all the way. So kind of going up to an all-time high and now coming in for a rest, and could be a launching pad to more upside. MACD on the weekly is kind of negative, and the daily is threatening to cross the fast line over the slow line. Taking a look at the NDX, NASDAQ, you can see a similar picture, but stronger than the SPY or the SPX was today. Again, we are still in this choppy trading range that we've been in for days, if not weeks. If we go back all the way over here on December 4th, I mean, we're basically, or make it all right, the 6th, we're basically in the same range that we've been in for a couple of months now. And you can see that also on the weekly here. MACD is negative on the weekly. MACD is positive on the daily. So kind of mixed messages, recipe for a chop. We had a 447 point move on the NASDAQ scheduled for this week. And this morning when we came in, the NASDAQ was already down about 250 points before recovering and turning positive on the day. So some resilience. We can't seem to sell out for more than a few hours. So that's a good thing for the markets. We just need to move out of the chop area. And it would seem to me that the move could be to the upside. We'll see. But everybody's talking about the chop. And when everybody talks about the chop, it means the chop is getting close to ending. Small caps here, Russell 2000, holding support here, but barely by a thread. MACD turning back down again. Just a choppy mess. This is a go nowhere under the 50-day. Holding the lower Bollinger Band on a weekly basis. Just another chopped up mess with solidly negative MACD, but still above the zero line, no momentum whatsoever. Russell 2000 small caps just not doing it this year for the kind of beginning of year trade. So we'll have to see what the rest of February brings. The first half of February tends to be the more bullish part of it. We'll see if that holds true or if we get some follow through strength. But for now, it just seems like the market wants to continue up, and tomorrow after the producer price index might tell us some more about the strength. Looking at the VIX, we closed at 15.89, let's call it 16. I mean, we were barely down. We were down just 13 basis points, and that's really nothing. If we look at the options on the VIX, we call it 16. So if we look at the 17 calls, probably pricing at about $1.84. Go out to the 15 calls and they're pricing at about 44 cents. So 4 to 5 times the calls versus the puts, still indicating of hedging activity going on, though 4 to 5 times ratio is not that big of a deal, but it does give the edge to the bears, at least as far as this indicator. I said earlier that the SPX had a 98-point move for the entire week. If we look at things through Valentine's Day, or also known as Friday, we still have about half of that move left into Friday, and that's a factor of PPI coming up. And so if we take a look at the economic calendar, what we've got going on tomorrow, we got the producer price index along with jobless claims tomorrow, and 30-year bond auction and Fed balance sheet at 4:30, big deal. But Friday, we still have retail sales. That's an indication of inflation and the economy, import and export prices, industrial productions. So we still have significant economic news to get us through the rest of the week. So even though there's only 2 trading days left in the week, we do have 50% of the weekly expected move. Again, if you're a short-term trader of options, be a buyer, not a seller, at least not in this environment, given the extreme moves that we've been seeing in the markets. So let's take a look at earnings coming up. This evening we had AppLovin, which is about up $110 after hours. I didn't see Reddit. What did Reddit do? If they reported um, up at 216, um, getting, yeah, hit about 12% after hours, so not doing good. Another one getting hit. Um, and really, an awful report was the trade desk, and that one's losing about 25% of its market cap in the overnight market. So not sure what happened there, but awful report and an awful reaction. And here's the APP. You can see that reaction up about $116 or 31%. What a beautiful move for anybody holding that one into earnings. And that's on the heels of the last earnings report where it gapped up and it just held it. It just been a beautiful hold for this one. Back to the earnings. Robinhood also reporting doing well. Dutch Bros also was up last I checked. Cisco holding up the NASDAQ. It's up about 90 points, the futures overnight. So nice tech report should bode well tomorrow unless PPI spoils the party. But if they cared about inflation, we would have stayed down this morning. They didn't care about it. And we also have more tech earnings in the morning with Datadog, CyberArk, these cyber stocks, John Deere, Crocs, Duke Energy, and GE Healthcare. And then after the close, we have Coinbase and Twilio, DraftKings, AMAT, Applied Materials, Airbnb, Palo Alto Network. So 3 cybersecurity stocks, big ones reporting. So if you own any of the cybersecurity stocks, those will be effective tomorrow, including CrowdStrike and the Zscaler, among twos that I can think of. Roku, Win, as well after market. And on Friday, we have Moderna, Enbridge, AMC Networks for any of these. What do you call them anymore? I can't even think of them. The Game Stoppers. Anyway, AMC Networks tomorrow or Friday before the open. So, and I think from this week, after this week, earnings start to lighten up considerably as earnings season draws to a close. All right, all that, and let's get to our option trades and call it a night. Already a little bit late on getting this out. I apologize for that. Doing a bunch of preparation. And let's see, I need the option trade. So let's bring that up here. Not that one. Yep, this one. Okay. So this was sorted in alphabetical order. Okay. Let's bring the chart up. All right. So AAOI, our first one. We're looking at the daily chart on the left and then the trade itself on the right. AOI, after it looked like it was going to break through the 50-day, has come in 2 days in a row. So we're down 57% on this play. Not liking it at all. If we break this, hang on a second. There we go. Get my act together here. Okay, so 50-day was way up here, but this is what we got on Monday, and it was starting to look really good. Although I should have known by the topping and the bottoming candle that wasn't going to look good, and 2 days down. So if we kind of undercut this, we're going to be out of here. We have earnings next week, and unfortunately, this one is not working out. It really looked really good. This could be considered a specialist trapped, as trader Larry Williams talks about often. APA, we took in a sold a put yesterday, the 20th put in April. Plenty of time on this. We're down about 16 cents. Again, a bit of a topping tail at the end of the day. It was looking really strong yesterday and had a tough time even getting 40 cents out of the trade. If you waited till today, you did a little better, but this has until April. We're still at least 12, 13% away from the short end of the strike, so not worried about this. We just had weakness in oil and gas stocks today. Asana, after we took our first profit target on Monday, was down yesterday and recovered a bit today. So we're still up about 51% on this. Our next price target is well, we took the 3.4, next one is 4.75. So this one is a March play. Hopefully it'll continue to pay off for us. The chart is finally looking good and back to the upside. This was looking pretty bad in the morning, bouncing off the 50-day. Hopefully it continues to recover. Our star of the show is Baba. After our second try, we got up to 100 and almost 120 today, and I really think this stock is heading for 150, but it's not going to be in a straight line, but this is as good of parabolic as you can get. So we're holding off on our last bit. I raised the price target to 29.50 for the next one. We are at 24.32 today. That's where we closed, and a nice profit, and more than making up for the last Baba trade where we lost money. BE, Bloom Energy, chopping around here after the DeepSeek debacle on the 27th of January. Meandering around, this is a May play. We've taken a couple price targets. We are right now at about $2.38. So still holding up okay. Like to see more strength from this. If it can't get it together soon above the 50-day, then I'll just exit this play. No sense in just waiting around for theta to decay, but it is a longer term play, so I need to give it a fair chance. We have our share of short puts on, and CVX is one of them. This one is a put out in March, and true to form, energy was weak today after a really nice series of strong days. CVX, we're up still on this about 66%. This is a put in March, so it's got plenty of time. And CVX is actually, this is a put spread, by the way, not just a put. So we're okay on this, and we're considerably $15 away almost from the short strike. Caesars Entertainment, we're up 42% on this. This is a March 30th put that we sold. Still holding up well. We're at least $5.60 away from the short strike. We just let this work. Every day we get closer to expiration, the more it works in our favor, as long as we stay away from this low down here, the 30.78. Another short put, Delta Airlines, finally bouncing off the 50-day yesterday and heading higher. We are up 50% on this play, and this one expires on February 21st. So this monthly expiration, and it's looking pretty good. So we should be able to harvest most of the premium on this put sale. FXI, another put sale. You can see similar to Baba, kind of been straight shot up. I regret that I didn't put on a call spread here, and but at least we are in our second roll of the original puts that we sold on FXI. We're up 75% here, and we'll take it. So right now we're at 13 cents. Might be time to roll this out. If I get a little weakness, maybe roll it out to April and continue this particular series of Chinese ETF rolls. GDX, here's one that's also somewhat parabolic, going up with gold, and we've taken 3 price targets. And the only thing I regret about this is that we kind of kept our gains a bit with the 39.44. So we've got plenty of time, and that's part of the problem why this won't expand very quickly. given how fast and how far this has gone. So our next price target is $3.75. And we have until June. So this is one of my 2025 themes for gold strength, and that's certainly playing out. And again, my only regret is capping this with a short call, and also not playing the GLD from the start, as this has been stronger than the miners, so to speak. And you can see the parabolic move here in gold, from a low of 239 to now we hit 268, I guess, earlier this week. So we took advantage of a little weakness this morning and put on a bull put spread, and we're already up 26% on it, and it expires February 21st. So hopefully you grabbed a few of these, and as long as we stay away from the 263 strike, which is about $5 away, and deliberately on my part priced under this parabolic stop and reverse volatility stop, to kind of give you a warning that if it takes out this 265 level, it's probably going to come in a bit further and maybe head down to 260. So we probably will think about moving it out in time, collecting more premium, and keeping ourselves a bit safe. Grab kind of busting a move today, after this failed move up here that came right back in, and now it's trying to get back out there. It's up to $5, closed at $5 on the nose. We're still down 33% on these calls, but with these longer term calls, and this was a speculation, we have plenty of time, I think about 65 days, but I really think, as one of my themes, I think this one is going to do well. And I think if we can break above this high here, we're going to head up to that old high, and that'll give some nice juice to our long-term calls, and make some money on this, hopefully. Here's something I haven't said in a while. Intel is starting to show some strength here. So we've had 3 solid days of progress on here. And I will say that I have updated the price targets on this one, because they were still based on an old trade we had. I realized that going through this. And so our first price target on here is 195. I'll probably modify that, but especially since we're going to be probably headed for this 200-day, this red line here, 2480, before we start running into some strong resistance. Obviously, there's supply all the way down here, but Intel starting to show signs of life, and hopefully we can start making money on this particular spread. We spent 70 cents on this, or at least we collected a 70-cent credit overall, but we are down 50% because of the prior play that we had that did not make money. It actually lost money, and we rolled this out. J&J holding up pretty well, up from 140 up to 155. We've taken 5 price targets, and we've got our next one here at around 875. I don't believe that it's at 357 right now, but that's what happens in the after hours with the pricing. But looking really good, and very nice and profitable for us after a very slow start, admittedly. Lyft is a new one today. You can see here, even though it was down about 8% today, a nice green candle because we closed higher than the open. And this is out into June. This is going to be the definition of a slow trade, since we collected about 47 cents for this, and we're going to just hold on to it, and hopefully Lyft can stay away from the $10 level, and we just let the premium dissipate in this. Microsoft, not showing a lot of strength, but finally finding a bottom here at 405. Hopefully that's where it finds its footing. We have a 395, 375 put spread, which we sold for $2, and we're still $14 away from the short strike, and it expires, I guess it's this Friday. No, this is pay attention here. 21 February, so we have another 9 days for this to get to full value. What we have that expires this week is a quick call on Netflix, which was kind of left for dead this morning. Look at that terrific candle. At one point, I think Netflix was down $18 and maybe not that much, $8 or $9, and then we ended up closing up $19. And so our options were down about 75% at the open, and this was our lotto. So we harvested one price level. I've got a price, with the NASDAQ strength overnight, if it continues through the producer price index report tomorrow, I think Netflix will open up nicely. So I'm putting an aggressive price target on our next harvest, profit harvest at 12.25, essentially a double of what we paid for these calls. And don't think that can happen tomorrow. So be ready in the morning if Netflix gaps up to take some more profit targets on this short-term lotto play. NVIDIA holding up pretty well. Didn't do much today. It was down about $1.66, but in the overall scheme of things, holding up pretty well. Still below the 50-day and the 100-day. And if we can get above this parabolic stop and reverse this volatility stop at 134.48, this one could be off and going. What we have here, the two plays on here. Let me go back. Sorry, Netflix. We had two plays on Netflix, and that was the vertical. And so we closed at 12.30, and our next price target is 16.50 on this vertical. It's a 20-point vertical. This is a little aggressive target, and we'll probably take profit sooner than 16.50, but you never know what might happen on a big gap up. Back to NVIDIA. Sorry about that. We have this covered call still in contention, and we're back in the green on it, up to 2.19. It's a 140 covered call that we rolled from December to January to February, and now we are into March. So it's kind of a slow trade, but it's paying off. And even though we started out with Netflix at 146, we're still profitable on this trade. SCHW, we have a short put that expires on the 21st. We're up just slightly on it, so you can see that similar to the rest of the market, this gap down and recovered for the rest of the day. Still down 92 cents, but this is a 79 put. So we are a bit of ways from that short strike, and with any luck, we will keep that premium entirely. SLV, just like gold, not as strong, but still working for us. We've got this short put in March, and it's looking like we may have to roll again, since this is now down to 11 cents. And once I get into single digits, I like to roll this thing out. So we have done a couple of rolls on this and been profitable. So it's been a good trade, albeit we have not really gone long any premium, which probably would have been the more profitable trade. But you can see all these gaps with SLV, hard to hold, and the choppiness. Here we are, 1, 2, 3, 4, 5, 6, 7 days in the range, and all that does is basically chew up premium for nothing. SMR, a new trade today, new long trade out to May. We bought a straight call on this one. I'll look to spread this later, but really looking really good. I mean, at this point, if you look at the weekly, I think it looks a little better. My chart is a little compressed here, but coming down for a landing and heading right back up above 28.68. This thing can keep going. That's a parabolic stop and reverse on the weekly. So I like SMR. Here we go. And we just need to get up above this $28 and we can head up to the old high here. MACD is strong and yeah, I think this one could work. We have earnings on the 27th on this. We'll figure out what we're going to do with it ahead of that time. TLT, we have two plays. We got a gap down this morning on the CPI data as might be expected. So we are still in the profit zone here. It's the March 85.90 call spread. Obviously, we are no longer inside the actual being deep in the money, but right now we have also the 50-day is once again resistance for here. So we'll see if this translates into any meaningful weakness for TLT. I don't think the run is over, but we were struggling just above the 50-day. So the short puts right now that we recently rolled out to the April 86s are underwater. Says here by about 87%. It might be a little exaggerated, but we have plenty of time on it. And if we have to roll out a little bit further, we will, but we have already done a couple of rolls on our TLT puts. We look at the long side. This is the 85.90 call spread, taking 4 price targets, still holding up pretty well. Keep an eye on that one. Tesla finally finding a little bit of strength though. I mean, a series of weakness right at the 100-day. Not holding the entire strength. You got a bit of a topping tail here. MACD solidly negative. And if we take a look at the weekly chart, not really looking good, but still holding up this chandelier stop. So we need to see a close above, say 342 on the week. That would be great. And it would hold this weekly chandelier stop and keep this in a bullish formation. A close below that for the week, then it's not going to look too promising. We may head down to the 281 level. That's where an ATR trailing stop is right now, but that's below the 21 weekly. Our Tesla play is at 1668. I keep debating whether to take the rest of this off or not, but I'm still looking for more information. We're not too far out of the money, but I also want to be cognizant of the fact that we have a lot of premium on here and we need Tesla to start getting back in gear. Finally, we have URA, the uranium play. We're down 40% on these April calls. Was really going well until the DeepSeek debacle, and now we're just chopping around. And of course, that's not good for long options, but we have plenty of time on this. And had a nice candle today, up a whopping 34 cents. But if we can get above this chandelier stop at about 29.82, then we should start getting going. So I haven't given up on uranium as a strength in 2025, but we need to get above the 50-day and one thing at a time, so to speak. Anyway, that's all for tonight. It's been a long video, I know. Hopefully you found some value in this. I'm Trader Geek Sam in the forum, or at Trader Geek on Twitter. Give me a follow, and I will see you in the room tomorrow. Take care and have a good night. Bye-bye.